have it, the closing bell at the New York Stock Exchange, ending another day of trading. The Dow closed out the day relatively flat, down by about 50 points.
The S&P fell by about half a percentage point, while the tech-heavy NASDAQ is down by more than 1%. Rick Newman joins us now. He is a senior columnist for Yahoo Finance and author of Rebounders, How Winners Pivot from Setback to Success. Rick, welcome. Thanks very much for being with us. So what was driving the markets today?
Everybody's looking ahead to the inflation report tomorrow. That's the big thing. So kind of marginally down day for stocks in general. There were some worries in the tech industry, some warnings from semiconductor manufacturers. The profits might be a little bit lower than expected. So that explains why the NASDAQ index is down a little bit more than the overall stock market. But mainly, everybody just wants to see what's going to happen when the inflation report comes out tomorrow at 8:30 a.m. Eastern, and whether it's going to be a meaningful improvement on the report from the prior month, which shows inflation running at 9.1%. That's too high, and we need to get that lower.
Right. All right, Rick. So as you pointed out, everyone is waiting for that report. And we know that inflation hit a 4-decade high in June. What are you personally expecting that tomorrow's report will tell us?
We know that the number is almost certainly going to be lower than 9.1%. And the thing I pay attention to, by the way, is just the year-over-year number. That's the one that makes sense to people. They also talk about the month-over-month change in inflation. Most people don't think about inflation that way. So 9.1% inflation is what we have right now. The forecast for July is that that's going to come down to around 8.7% inflation. Now, we know that's likely to happen because we've seen gas prices coming down all across the country. They're down something like 80 cents per gallon since the middle of June, when they peaked at around $5.02 a gallon. So gasoline prices are down, oil prices are down, energy prices generally down. Everybody can see that when they fill up their car. I think the real question is whether we might see a surprise, a favorable surprise, in which inflation might be even lower than the forecast. So the forecast is for about 8.7% year-over-year inflation. I would not be surprised if it came in lower than that, simply because we are seeing signs of inflation pressures easing in supply chains. Certain things that have been hard to find are getting a little easier to find. And I mentioned before, we heard some of the companies that make semiconductors, computer chips, saying that profits might be coming in a little bit lower than expected. That's actually good news in a way, because guess what? We've had a huge shortage of semiconductors. That's one of the reasons that there aren't enough cars for people to buy, and car prices are so high. So if that market is flatlining a little bit, that starts to signal supply problems are easing, and in coming months, maybe those prices will come down.
Interesting. All right. So after last week's jobs report, many economists predicted the Federal Reserve would respond with another interest rate hike. But if what you're saying comes to fruition, or tomorrow's CPI report shows inflation is really starting to calm down, could the Fed, in fact, choose to pull back?
Well, the Fed is going to continue to raise interest rates, I think, through the rest of the year. That's not the question. The question is by how much. And we have seen this pretty unusual back-to-back increases of 0.75 of a percentage point, one meeting after another. The Fed does not usually raise interest rates that aggressively. So I think the expectation for the next time the Fed acts, which will be in September, is it doesn't need to be 0.75 of a point. It could be 0.5 of a percentage point. But if we get lower than expected inflation, the pressure would be off the Fed. So the most bullish thing that the Fed could probably do, at least for the stock market at this point, and they're not going to telegraph this, we're not going to know until they actually do, it would be if we did not get a 0.5 point increase in September, but just a 0.25 point increase. That would really be a strong signal to markets that the Fed thinks it is winning the fight against inflation. And that would probably push stock prices up. Now, people are going to be guessing about this once we get the inflation number tomorrow. But it's going to be several weeks before the Fed actually tells us what it's going to do. So whatever the markets do when we see the inflation number tomorrow, that's going to be a guess about the direction of the Fed's actions in September.
All right. All eyes on that report tomorrow. Rick Newman. Rick, thank you so much.
Thanks, guys. See you.